Thanks for joining us from the Ohio AgNet Voice You Know with the News You Trust studio, sponsored by the Family Forest Carbon Program, where we help family forest owners get paid to improve the health of their woods. Well, last evening it was very, very hot until about 4 o'clock, so before evening, we got one of those short little pop-up showers. It dropped the temperature to 72 degrees, and we ended up with little over 3/4 of an inch of rain in the early afternoon. Well, oil futures edged up on Wednesday following the Energy Information Administration and American Petroleum data showing a draw on commercial oil inventories last week. U.S. commercial crude oil inventories posted a draw during the week ending June 20th as refinery inputs edged higher and imports rose, the EIA said on Wednesday. Now, crude oil inventories, excluding the Strategic Petroleum Reserve, fell by 5.8 million barrels to 415.1 million barrels last week, 9.9% below the 5-year average for this time of the year. This figure was above the 4.27 million draw reported by API June 24th for the same reference week. Meanwhile, gasoline inventories dropped by 2.1 million barrels to 227.9 million barrels last week, in contrast to API's reported 764,000 barrel build. Distillate fuel stocks fell by 4.1 million barrels to 105.3 million barrels, compared with a 1.026 million barrel draw reported by API. Inventories remain about 13% below the 5-year average for this time of the year. The oil futures market discarded the geopolitical risk premium tied to the Israel-Iran war, which sent prices rocketing over the past 2 weeks. Both countries have so far largely adhered to the ceasefire, easing supply concerns. In contrast to all of that, the U.S. dollar index fell by 0.1600 points to 97.29 against a basket of foreign currencies. Today's weather brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. Here's the forecast.
Plenty of clouds around through the rest of the week, but also some breaks of sunshine. I'm Chief Meteorologist Ryan Martin. Let's take a look at that Ohio Ag Weather Update. Unsettled is probably the key word in the forecast here. I think we have to allow for pop-up scattered showers and thunderstorms pretty much every day here from today right on through Sunday. And then we have a frontal boundary coming through Monday afternoon into very early Tuesday morning that also brings rain. If there is a day that has the least amount of potential for pop-up activity, that's probably today. We're looking at likely 25% or less on the scattered shower and thunderstorm coverage here. But tomorrow, Saturday, Sunday, 40 to 60% possibilities of coverage of precipitation. The front on Monday hits everyone, and I think if you look at the whole period, today through Tuesday mid-morning, we're likely looking at anywhere from 1/2 to 2 inches on average, and that does not include isolated higher totals that will come with thunderstorms. So we'll have to see how that all comes together. We move into a drier pattern for next Tuesday afternoon, Wednesday, and Thursday. Friday, July 4th, watching a system off to the west. I don't think it gets here. I'm timing it more toward the 5th and 6th, but it's up for some debate how fast that front wants to move in. So several dry days strung together. Then we get into the holiday weekend, and your holiday weekend will be interrupted at some point, whether it's early or late, but it's going to be interrupted at some point with some shower and thunderstorm action. I'm meteorologist Ryan Martin.
And thanks, Ryan. Let's check in with our weekly update from the Ohio Soybean Council and your checkoff dollars at work. Here's Dusty Sonnenberg.
For this week's update, Ohio Country Journal editor Brianna Smith caught up with Dr. Laura Lindsay.
Joining me is Dr. Laura Lindsay, the state soybean and small grain specialist with OSU Extension. Dr. Lindsay, as you know, there has been a wet spring, and some people are looking at late planted soybeans, whether they're double cropping, replanting, or planting for the first time. Are there any adjustments that farmers should be making as we go into the late season here?
Sure. The first adjustment to think about is seeding rate. As we plant later in the growing season, we recommend increasing seeding rates. So if you plant the first half of June, we recommend having a plant stand of 130 to 150,000 plants per acre. So of course, seeding rate should be higher than that. Once we get into the end of June and double crop soybean situations, we would like to see a plant population of at least 180,000 plants per acre. The other thing to keep in mind is row width. Narrow rows are always better, and narrow is 15 or 7.5 inches. Those are always better than 30-inch rows, and the effect of row width is greater as you plant later. So really, if you're thinking about planting in June or July, really trying to have narrow rows if at all possible.
Thank you. That was Dr. Laura Lindsay, the state soybean and small grain specialist with OSU Extension. Reporting for Ohio's Country Journal and Ohio AgNet, I'm Brianna Smith.
Thanks, Brianna. And this update brought to you by the Ohio Soybean Council and your soybean checkoff.
And thanks, Dusty. The National Cattlemen's Beef Association and their affiliates wrote a letter of strong support of the tax package that was recently proposed by the Senate Finance Committee. They say NCBA is the oldest and largest national trade association representing the interest of the U.S. cattle industry, with over 178,000 members represented through direct membership and our 44 state affiliate organizations. Renewing the expiring 2017 tax policies is essential for the success of our family-owned cattle operations and bolstering producer profitability across rural America. Time is of the essence, and we encourage swift passage of the tax package. Most notably, we are very supportive of the proposed increase in the estate and gift tax exemption of $15 million. The estate tax, or death tax, is one of the greatest threats to multi-generational cattle operations. Cattle producers are asset-rich and cash-poor, and families are often forced to sell off part of their land or livestock to pay the estate tax. We also greatly appreciate the permanence of Section 199A, small business deduction, included in the text. Section 199A was established to ensure that pass-through businesses could compete on an equal footing with corporations following the reduction of the corporate tax rate. Cattle producers, many of which are structured as pass-through businesses, will face a tax increase if the deduction is allowed to expire. They also say family-owned cattle operations are a major economic driver across rural America, but they need a tax code that rewards their entrepreneurial spirit and encourages the continuation of multi-generational small businesses. We are very pleased with the Senate Finance Committee's effort to ensure permanence for many provisions that are important to farmers and ranchers. When producers know what to expect, they can confidently make estate and business plans without looking over their shoulder for an unexpected tax bill. These proposals are essential to the continued success of America's cattle producers. We thank the members of the Senate Finance Committee for their hard work, and we urge swift adoption of the tax package. And let's shift to dairy. Strengthening domestic sales of yogurt, butter, cheese, and dry skim milk drove higher gains in overall domestic commercial use for milk from February through April. The dairy exports dropped back during that period as losses in dry skim milk and whey protein exports more than offset gains in butter and cheese exports. U.S. milk and milk solids production growth is accelerating, with milk production up 1.2% year over year during the period, milk solids production up by twice this rate, and milk fat production up almost 3 times this rate. New U.S. cheese processing capacity is drawing heavily on the growing milk supply, with cheddar cheese production up 8.1% annually in April. The monthly NDPSR survey product prices and Class 3 and Class 4 prices were all higher in May than a month earlier. And a milestone to note, USDA in May announced its first price reports calculated using the updated Federal Milk Marketing Order formulas announced in January. Back with more after this.
Get the equipment and trucks you need at the Ritchie Brothers' next Great Lakes Regional event on June 26th and 27th. This absolute unreserved auction will feature online bidding, and items are located in Columbus, Chicago, and Detroit. Choose from over 2,000 items, including a wide selection of construction equipment, truck, tractors, and more. Don't miss Ritchie Brothers Great Lakes Regional Event on June 26th and 27th. For more details, visit rbauction.com. Again, that's rbauction.com.
Think biodiesel is just another fuel? Think again. Biodiesel is Ohio innovation on the move. Clean, green, and built to keep diesel engines running strong. It's an engine booster, a soybean supporter, and an environmental champion all in one. Every gallon reduces emissions, strengthens Ohio farms, and powers your ride. Drive with purpose. Choose biodiesel. Learn how at soyohio.org. Today's market analysis is brought to you by the Louis Dreyfus Company. Excited to be building the newest state-of-the-art soybean crush facility in Upper Sandusky, Ohio. For marketing information for your soybeans to LDC, call 574-566-2113. Here's Ryan Martin.
Grain markets finished mostly lower once again on Wednesday. It's been a tough week so far this week. Everything finished down except cotton. For a while, bean oil was a little bit stronger on the day, but even that eroded as we went through the afternoon hours. Falling U.S. crude inventories were really the story on the energy markets, but we could not see that translate over into anything on the agriculture side. Corn and wheat numbers continue to pace the correction for the week. Double-digit losses in Kansas City wheat and Minneapolis wheat. Chicago was about 7 to 8 lower. Corn followed the wheat down overall. We continue to see a fairly typically cheap Brazilian crop offers right now, and we've also got cheap Russian FOB wheat offers. Those were the catalyst on Wednesday. Markets worldwide trying to sort out the coming jump in physical supply availability. Bins from Brazil to the U.S. to the Black Sea become full over the next 90 to 120 days overall. Now, we did have some news out of Brazil on the ethanol side of things. The government there approved a hike in mandated ethanol blending from 27 to 30% beginning August 1st. Most are thinking, though, that Brazil will be forced to export still about 49 to 50 million metric tons of corn between August and January, even with the increased need for grind for ethanol in Brazil. This compares to the current USDA Brazilian corn export forecast that's all the way down at 43 million metric tons. So definitely going to be seeing that probably dig into the U.S. balance sheet when it comes to exporting U.S. corn. Argentine soybeans are offered at about $14 a metric ton below the U.S. Gulf origin as well. That means our bean market, our bean export pace here in the U.S. is going to continue to just crawl along. Weekly ethanol production for the week ending June 20th came in at 318 million gallons versus 326 the previous week, but the 318 is still up 4% year on year. I'm Ryan Martin.
And thanks, Ryan. Today's market's brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. Overnight at the open, July corn up a penny at $4.11 1/4 cents. December corn $4.23, up a half. March also up a half a cent at $4.38 3/4. Beans are split with July up a half at $10.25 3/4. November unchanged at $10.18 1/2, and January down 1/4 cent at $10.33 1/2 cents. July wheat up 2 at $5.30 1/4 cent. September up a half at $5.45, and December $5.68 1/4 cent, up 3/4. In livestock, June cattle unchanged at $221.60. The August down 57 cents at $208.97. October down 60 cents at $206.35. July lean hogs up 60 cents. They closed at $112.82. August $111.22, up 27. And October up 25 cents at $95.72. September feeder cattle $302.60, up 15. October up a dime at $300.75. That's our latest look at the markets. Be sure to take some time and check out ohioagnet.com. You can look at some articles titled things like Looking for Profit, Weather, Plan now for manure management this fall. Fishing is fine on the big lakes, and campers receive college scholarships. All of those things you can check out at OhioAgNet.com. Thanks for joining us. I'm Dale Menyo. This is the Ohio AgNet.